Arvind Sanger is with us, managing partner at Geosphere Capital Management. Arvind, good morning. Great to have you with us here. We'll talk about the global and, of course, the budget here in just a bit. But if you've been listening into Ritu describing what's happened with Paytm, for viewers, what is the impact? I mean, for investors who are holding the shares, it's going to be a big day on the downside for the stock.
Well, we haven't looked closely at the stock, but obviously this is not good news. So, I mean, clearly they have been somewhat lax in their response to RBI's requirements for being more, diligent about some of their customer onboarding and everything else. So, yes, I think it'll definitely have a negative impact on the stock.
Okay, it'll definitely have a negative impact on the stock. Got that. Big blow coming through this morning. But Arvind, hi, good morning. What is your expectation from the budget this time around? Given it's an interim budget, are you keeping your expectations low? And from a market standpoint, how are you going into it? Because the market has been pretty strong so far.
Well, I think the market is probably not expecting much. And we are not, the number one view, in my opinion, is avoid big surprises. At the end of the day, the last thing that the market needs is a big surprise. And so, as long as they continue on their somewhat discipline, on the current account deficit, on the fiscal deficit, and there are not massive, spending stops to the, to prepare for the election, I think the budget should be largely a non-event. And I think we're watching other things that matter more. This budget, as you said, it's an interim budget before an election. So I think it's hopefully a non-event.
Okay, let me play the devil's advocate. First, Arvind Sanger, really grateful that you're staying up for us so late. It's early morning here, but I guess very late for you.
I'm on a flight to India in about half an hour. So,
okay, welcome. We'll meet you in the studio. Okay, should we really worry if the government spent a bit? Because core inflation has been falling. Secondly, although GDP is good, consumption hasn't been good. So isn't a bit of a spend actually good from a market point of view and even the economy point of view?
I think the government has done a very good job in terms of some of the support that they provided on food and other items. So I think that the government is already doing something. So a little bit, you're right, a little bit is not going to hurt. Clearly, it's a bit of a K-shaped recovery. So therefore, helping a little bit at the bottom of the pyramid would not hurt. But as long as the fiscal deficit is not, too far. I mean, I think, yes, India has had very good inflation discipline. It's had good fiscal discipline. I'd hate to see them, let anything too meaningful go. But, doing a little bit is not going to matter too much.
Arvind, one thing they can do, and I think they should do, is stake sales in government companies. If there is ever a time to do it, PSUs have been to the moon. Valuations are rich. It's a very, very sort of hefty kitty they can raise if they do it, especially in the first year of the new government. I mean, of course, if they're re-elected.
Well, here's my simple point, right? You don't have to announce in a budget. I mean, you can announce all kinds of intentions, and sometimes they get hit, sometimes they don't get hit. Just do the damn thing. I'm sorry to be blunt about it, but when the markets are there, as they say in our business, when the ducks are quacking, feed them. When the market is there, do it. I don't care whether it's in the budget or not. Somebody in the bureaucracy, in the government needs to realize that when the markets are willing, it's something to act on, whether or not you've thought about it in the budget and you've put it in the budget or not. You just have to have some ideas that long-term you're wanting to bring your stakes down. And you do it when the opportunity is there, not when it's in the budget. Who cares? I mean, this budget exercise is a little bit of, in my opinion, kind of an anachronism that, shouldn't drive so much focus, but it still does, I guess, in India. So maybe they need to put it in the budget, but I think they should definitely take advantage of it.
You're veering to that point of view, Arvind, but that's when suddenly industrial policy returned. Import tariffs jacked up, PLI schemes. Industrial policy has returned, and how? Not just in India, even in the United States, as we see with the CHIPS Act. But just a final question to you. How are you looking at the market's valuations itself? You must have seen the earnings season. We've had some good numbers. Auto sales, auto numbers were very good. FMCG was not too good. Banking numbers have been worse than last time, but still inherently good. So how are you looking at valuations, and how are you looking at HDFC Bank?
Well, we think valuations are not particularly compelling. but they're okay. I mean, I think there are still some pockets of opportunity, but the market, let's be clear, especially in the mid caps, is not cheap. As far as the HDFC Bank is concerned, I think, a lot of bad news is priced in. But, when I was on your channel about a couple of weeks ago, somebody asked me about the private sector banks. And my statement then, which stays today, is that the biggest concern I saw in private sector banks is the loan to deposit ratio and whether the deposits were going fast enough. And that's turned out to be the big negative concern that has emerged in the market since the earnings report. I think HDFC Bank obviously has unique problems in digesting HDFC, but a lot of bad news is priced in. We don't own it right now, but I think this is one high quality bank that seems to have gotten to, very interesting valuations.
A couple of final questions before we let you go, Arvind. One thing that the government has made very clear is that apart from, maintaining the fiscal glide path, they're also looking at this being an investment-led, growth-driven economy, right? So they're looking to do all that it takes in order to let growth pick up. What do you think the announcements could be this time around leading to that? And what is your view on how to approach these infra-driven names? I mean, whether it's not just the L&Ts of the world, but a lot of these companies in the broader markets as well. Do you think it's a good time to put money to work here?
Well, I think, anything related to industrial capex, anything related to even some of the power sector capex, those are good. And I think the government has, the PLI scheme is obviously a big one. But other measures that they've taken have been pro, infrastructure. And I think anything that is infrastructure related is good. But I think it's time for the private sector to take over. I think the government just needs to, allow the fiscal space. I think it is time for the private sector to step up. And I think it's starting. But I think the PLI scheme and the other things are enough. And anything the government can do to facilitate more movement in that direction rather than government doing infrastructure here and infrastructure there, which is great. But I think it's also time for the private sector. So anything they can do to encourage private sector investment, I think, is critical at this time.
Okay, Arvind. Finally, I mean, I'm asking I'm asking this question to all the global guests I get. Are we really in a very good scenario, and we are just picking holes? I mean, look at the way the GDP growth surprised on the upside for the US. Similar thing happened in India. A good 0.5 percentage point, 1 percentage point more than what the street is expecting, and plus core inflation is consistently falling. It's Goldilocks time. Are we just supposed to just enjoy it?
Yeah, no, I think it's Goldilocks times. I mean, the only, if I can make a comment, if China, when it was at the same demographic dividend, was growing at 7.5%, it would be considered disastrous. It was growing at 10+%. I don't think we should be satisfied with 7.5%. I think we have to be aiming higher at this stage of per capita GDP, at this stage of a demographic dividend. I don't think 7.5% is enough. I mean, I think it's very good. I love it. I invest, I make money. But I think from a policy standpoint, declaring victory at 7.5%, in my opinion, is aiming too low. And that's something you have to keep in mind. Look at the Southeast Asian countries when they were going through their growth phase, demographic dividend. Look at China, and don't be so self-smug and satisfied at 7.5%.
All right.
I completely agree with you. Thank you very much, Arvind, for putting it so beautifully. We should be aiming higher. Maybe 12 and 14 that China did because they were in a different global environment at that time. Yeah, go ahead.
Thank you. Thank you. 10 is enough. I think at least double digit.
Yeah, I agree with you. But surely we shouldn't be satisfied with 7.
Absolutely. But, we have a